Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 31st of March. I'm Daniel Lam, your host for the podcast. Talks about higher oil prices and the impact is becoming front and center in our daily conversations. For example, fuel surcharge that airlines have been charging. That affects travel plans. Those involved in trading would be complaining about the rising cost for shipping of goods. Energy is needed everywhere. Well, the outlines of a potential solution are emerging. The US initiated ceasefire proposals, signaling that Washington is approaching its political and economic pain threshold. So this is the Trump put, i.e. the propensity to reverse course when domestic pressures reach critical levels. Of course, Trump's approval ratings have dropped to the lowest point in his second term, while equities and bond markets have been under pressure. Now, historically, the administration has reversed unpopular proposals, such as the Liberation Day tariffs and the threat of force to control Greenland, when the pain indicator levels were considerably below those seen today. So the current path makes a policy shift towards de-escalation probable. But Iran has publicly resisted these overtones, maintaining its blockade of the Strait of Hormuz and keeping energy prices elevated. Now, although Iran's conventional capabilities have been severely degraded, they moved towards unconventional means, such as drone operations, but the frequency of which has declined over the past week. The global economy is showing signs of stress, but the pressure has not yet reached the threshold required to compel Iran to the negotiating table. The ongoing release of 400 million barrels of oil reserves by developed economies and the lifting of sanctions on some Russian or Iranian oil has relieved pressure for a few weeks. But the OECD raised its inflation estimate for the G20 economies this year to 4%, while some energy importing EMs have begun to ration energy supplies and curtailing activities. So Iran is aware that its ability to sustain the blockade is finite, and the prospect of global powers applying concerted pressure to reopen the strait is rising. Meanwhile, the US has reportedly exhausted several years' worth of missile interceptor production, while its most advanced aircraft carrier has been withdrawn for repairs. So it is possible that we get an eventual ceasefire and some kind of normalization of traffic through the strait in a few weeks. Now, the VIX went over 30% at the end of last week, showing signs of stress, but volatility gives opportunities. One can average in the bonds, especially in the US, because weakening growth is coming to the fore in the second half of 2026, prompting for rate cuts. Investors can also look to be adding to gold. There was profit taking because investors want to go for liquidity, but structural demand from central banks should come back to be the key driver over the medium term once the tensions stabilizes. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.